Hello and welcome to the Stansberry Investor Hour. I'm Dan Ferris. I'm the editor of Extreme Value and the Ferris Report, both published by Stansberry Research.
And I'm Corey McLaughlin, editor of the Stansberry Daily Digest. Today we talk with Kevin Duffy, editor of the Coffee Can Portfolio.
Kevin's an old friend. We have spoken with him a few times over the years, but it's been a little bit too long, so we need to check back in. Let's do that right now. Let's talk with Kevin Duffy. Let's do it right now. Kevin, welcome back to the show. It's always good to see you.
Good to see you and to meet you, Corey, and thanks for having me back on.
It's been a little while. It's been about 2.5 years. Been since about March 23 since we last spoke.
Yeah, I think it goes back to the banking crisis with SIVB, Silicon Valley Bank.
Yep.
I think that was the last time.
It was. No crisis this time, but
no.
Who knows?
And crisis averted last time.
That's right. But who knows? You never know what's going to break.
It's just an ongoing crisis, yes.
we can always be hopeful, can't we? So let's remind our listeners who you are and what you do.
Okay. Well, I actually do two things. I run a small hedge fund and under Bearing Asset Management, and I also started writing a newsletter called the Coffee Can Portfolio. I started that about 5.5 years ago.
Yeah, the Coffee Can Portfolio is a fantastic idea. I think I must have used the story of the coffee can. I think it was that Robert Kirby maybe 20 times in the past 25 years. I just sort of trot it out every few years because I figure another generation of subscribers needs to hear it. But that's really that coffee can story about buying stocks and throwing it in an old coffee can. That's not exactly what you do, is it, in the coffee can portfolio?
No. Yeah, it's a little bit misleading. And I actually got that idea. Our friend Chris Mayer, he wrote a book called 100 Baggers, and the Coffee Can Portfolio is a chapter in the book. And that was the inspiration for the idea. But in truth, my process is really a mishmash of a whole bunch of different influences. And I think as investors, we're probably all like that. We've all been influenced by different people. With me, it was first it was John Templeton, the great global investor and contrarian. Then it was Peter Lynch, going to the local grocery store or the retailer and coming up with ideas. And is this something that could be rolled out over the nation or over internationally? And then I discovered Austrian economics. And this was back in the late 1980s at the time of the Japan bubble. And so I had the contrarian piece. And also I discovered a guy by the name of Mark Faber, who was doing some interviews in Barron's. And I thought, well, this guy is a really, he's a contrarian. He's a nonconformist, and he's going against the grain. He's bearish on Japan. And so I had that piece. And then I discovered, at the same time, 1989, right at the top of this crazy bubble, and it was very, early in my career, the top of this bubble, I discover Austrian economics. And so I read Murray Rothbard's America's Great Depression. And I thought, wow, this is really interesting because, boom, artificial boom fueled by credit expansion leads to a bust. And then what happens? You get a crisis and you get a response. And the response makes the whole thing worse. And they drag it out. And so he explained how, first it was Hoover with really the pre-New Deal. And then it was FDR who came in. And also it was, with the massive government programs. And what they did was they prolonged the Depression. They made things worse. Well, the Fed also initially intervened in that, okay? Unlike the Depression of 1920, 1921, which Jim Grant wrote about, which was basically a kind of a laissez-faire approach. It's not that the engineers didn't want to get involved, but they did get it. But they never got around to it, and the thing was over before they knew it. So anyway, back to your original question. So that was another influence, and I've had many influences along the way. I think so. The coffee can portfolio is a little bit of everything. I think that part of it was really me. Kind of, I wanted to force myself to think out 10 years and maybe longer. Think about some of these long secular trends that are pretty much baked in the cake, and then just going along for the ride.
Long secretary baked in the cake. How do you mean?
Okay, so I think some of the trends, it's like a movie. Looking at history, it's like this movie that's unfolding, and I think if we understand history, we get a sense for how this movie, maybe it doesn't end, but where it's going. We don't necessarily know all of the uh, plot twists along the way. Those are maybe a little bit more difficult to figure out. But in terms of where things are going, like for example, fiat currencies, where does this end? Um, I think history and I think economics, especially Austrian economics, teaches us that it's going to end badly. It's going to, these will fail. I think you can look at, another really broad trend, and I know this is going to sound probably a little controversial, but there was the colonies really were a long trend in decentralization. They were the colonists, starting with Plymouth Rock, basically were escaping the oppressive kind of centralizing forces of the old world. And so they had this long run of decentralization, okay, where they were pretty much left alone, and freedom flourished. And then the revolution came along. They realized that they had a problem and they needed to get rid of the British. The problem was that the revolution, war is the health of the state, and so it kind of fired up these impulses towards, not just towards freedom. So on the one hand, yes, it was about freedom and getting rid of a tyrannical, ruler, but on the other hand, they replaced the old ruler with a new one, and really that cemented a change in trend from decentralization to centralization. And really, you could go back, and there were. This is a great book. I brought some props today. This is a great book called America's Counter-Revolution by Sheldon Richman, and I highly recommend it. And this is so to me, this reminds me a little bit of the movie Planet of the Apes, the original one with Charlton Heston. I'm sure you've seen that, Dan. Have you seen it, Corey?
I think I've seen parts of it. I don't know if I've seen the whole thing, but yeah.
Okay, so there, in the movie, there's this thing. There's the Forbidden Zone, and it's really about the history of how this this civilization evolved, where apes are on top and humans are on the bottom, and that so I think of that movie and the Forbidden Zone as a history. It's almost like you need a red pill and go back and revise history. So there's this great there's a tremendous amount of propaganda and spinning of American history, and I think it's important to go back and really challenge that. Um, so basically, the Constitution started this trend in centralization, and what we're seeing, and then the Civil War, of course, secession would have ended that. The secession of the South would have been a check on that trend, and that was arrested by the Civil War, and Abraham Lincoln, who was, of course, known as the great emancipator, but really he was the great centralizer. He gave us fiat currency. He gave us legal tender laws, the greenbacks. He suspended the laws of habeas corpus. He really just squashed secession. All these things were really led us on the path to the centralized state. And so what we're seeing today, I think, is just this trend, this long trend playing out. And I think of countervailing forces. So what we have here is this very negative trend towards centralization, towards top-down centralized power. But we also have a lot of countervailing forces that that have kept living standards rising in this country all this time. So you have, first, of course, you had the Industrial Revolution, and you have, now the Information Revolution. Um, I think, financialization and capital allocation, Warren Buffett and Charlie Munger, that was huge. But also over the last 30 years, the rise of China, the productivity miracle of China, and that we have this incredible distribution system. Retailers like Walmart and entrepreneurs like Sam Walton, and going out in the world and finding the best products at the lowest prices. This has been a boon to the consumer, and of course, what's good for the consumer is good for business. If the consumer if his paycheck is able to go further, he's got more money to spend. That creates more opportunities. So, I think I see this as, a number of trends that are pretty much baked in the cake. And the positive trends, I'm an optimist long term. The positive trends tend to roll along, but the negative trends tend to go through this pattern of a long rising trend culminated by a blow off, a euphoric episode, a bubble, and then a crash, and then a reversal of the trend. And I just think that that's what we're experiencing right now.
Oh, so we're in euphoria. We're at the I guess Templeton might call it the what is it, the optimism, the point of greatest optimism or something. Um, and certainly, like, I don't know, guys like you and I'm going to lump you in with me, are probably looking at the stock market very differently than a lot of other people are right now. I see the euphoria. To me, it looks like euphoria, but when it's happening, most people, they don't see it that way, do they? They just say, "Oh no, AI is real and it's going to change everything," or the .com, internet is real and it's going to change everything. And so the trend is right, but the investments are all, they get the trend basically right. The .com boom
Right.
got the importance of the internet correct, but it didn't stop them from making disastrous capital allocation decisions and disastrously bad, capital spending on all kinds of stuff that yes, the usage of the internet soared, but the price people paid for it like plummeted. So there were no returns to be had. And to me, it looks like that's where we are with AI and especially the data centers right now. It's just,
Yeah, I agree. And there's the saying that the pioneers take the arrows in the back and the settlers get
yeah.
rich. And this is exactly what happened during the .com days. And every bubble has a false belief. So the .com bubble, the false belief was not that the future was the internet. The false belief was first mover advantage. It was that the pets.coms and these startups were going to put the old guys out of business. Okay, so the old economy, and this is another symptom of bubbles, is that you see an anti-bubble is the mirror image of the bubble. Okay, and so all the excitement was in these young guys who were going to put the old guys out of business, and there was some truth to that. Certainly, Amazon ended up doing very well and putting companies like Borders out of business, and there was a tremendous amount of disruption that took place. But for the settlers to get rich, first there had to be a shakeout, which took place, and the old economy stocks did very well, and they adapted to a certain extent. They adapted to this disruption. Some of them did, some of them didn't. So fast forward the tape to today, and is AI, is it going to be as meaningful as the internet? I don't know the answer to that. I suspect that it's going to be significant, but there's a big question in terms of who the winners and losers are. And right now, investors are absolutely convinced that Nvidia is going to be the long-term winner, and that that they will basically retain their competitive dominance, and that they'll the profit margins are, I think, there's something like 65% operating margins. Over 80% of the gross profit is dropping to the bottom line, along with Taiwan Semiconductor. So these companies are very profitable, and I think there are threats that are not being realized, and I think we have to probably bring China into this discussion as well. And I think that China is sort of the anti-bubble to the American U.S. imperialism bubble, or U.S. exceptionalism bubble. I'm
Yeah.
sorry, that's probably a better
Yep.
description for it. And so I think that, and this goes back to Trump's first term, really trying to attack the Chinese, and they responded to this by it really jump-started indigenous innovation in China. And so, now you can look at what happened with Nvidia. Nvidia was selling the H20 chip, to get around the sanctions. That was, and then the Trump administration said you can't sell those, and now they're back on as long as Nvidia is paying 15% of revenue to the government, which they can absorb. But a company like AMD, of course, cannot absorb because they don't have the margins that Nvidia does. So, Nvidia. And where was I going with all this? They now want to sell chips back to China. Well, the Chinese are saying we're not interested. We basically can't trust you. So you have that's a threat to their business model. Also, the Chinese are they're innovating, and they're Huawei. There were sanctions against Huawei during the Trump administration, and now and they try to kill the company. They didn't kill the company, and now there have been reports that they've got chips that are competitive with Nvidia. Now, you don't have to believe that, and I think they don't have the ability to produce these chips probably in the quantities that Nvidia has. But these are competitive threats that are on the horizon that I think investors are overlooking when they're giving Nvidia a market valuation of $4.5 trillion.
Yeah, that's interesting. This sounds like sort of a symptom of the centralization theme that you're talking about. Unintended symptom of it. But what I'm interested in asking you, you sent us your latest issue, and you don't have to give away the whole thing, but one of the areas you're bullish on, I think, right now is China, right?
Yeah, and so, okay, China. What got me first interested in China was the private tutoring industry that Xi Jinping was apparently going to just wipe out. And so, as a contrarian, I looked at this and I thought, all right, let's dip a toe in the water and let's learn something here. And so that's what I did. And so I recommended New Oriental Education and Training, and the stock was down, I think, over 90% from the high. And they had cash in the bank, more than enough to cover what we were paying for the stock, no debt, and a business that was drying up. Now, what's happened is they've been able to adapt. I think Xi Jinping has backed off somewhat. The Chinese obviously value education. That was part of my original thesis. But what I've learned from this, now this was back in 2021. what I've learned from this is how adaptive the system is, and how these narratives that we hear here about how it's incredibly authoritative, and it's just destined for the dustbin of history, and all that, that there's a little bit of nuance there. There's more to it than that. And so I just dug in more and more, and I start looking at company after company, and what you see are a lot of really exciting qualities. And you also have to look at China in terms of their stock market. So 2007 was a huge bubble in China, and the retail investor was all in. Okay. Well, today the retail investor is gone. They're completely gone from the market. All right. So you can also look at the foreign investor. Well, the foreign investor has bought into these narratives that that you cannot invest in China. It's authoritative. It's the enemy. It's uninvestable. It's there's no rule of law. All that stuff, right, is all tossed in there. So that's kept foreign investors out. All right. And so it kind of begs the question, well, who's left to buy? And what you have, the companies are buying. They're buying their own shares. And what I see, one of the things I like to see is entrepreneurs, founder-led companies. You're seeing that. And these founders with lots of skin in the game, and we're seeing that. And the other part about this is the valuations. Of course, the valuations. If I'm looking at an apples to apples in terms of the kind of growth that I can get and the compounding and everything, I think the prices are like 50. It's a 50% off sale compared to what you can get here in the United States.
Nice. It sounds like a bargain.
And the thing about, so this I think is kind of interesting about China, and I'll bring it back to sort of the big picture and how I kind of got into this business, and I sort of cut my teeth on the Japan bubble, and I was one of the contrarians back then, along with Mark Faber. There weren't too many of us, but one of the things I learned from that is to question the narrative. So the narrative back then was that Japan was inevitable. History was on the side of Japan, and that all empires die. It was just the American empire's turn to die and to hand over the reins to the Japanese. So the Americas decline theory. So confidence was very low in the United States. It was very high in Japan. The retail investor got very excited in Japan. You had all these things going on, but it was the narrative, all right? And it was also the people that were driving the narrative and what the people thought. So, what you would see on the nightly business report would be MIT economists like Lester Thoreau, who were telling us that, look, the Japanese have a superior system of capitalism, kamikaze capitalism, or whatever you want to call it, Japan Inc. And it was this cooperation between business and government, and that this was an improvement over the more laissez-faire model of the United States. Well, as an Austrian, I looked at that and I thought, well, this is kind of nonsense. But what they were doing, the people that were behind pushing this narrative, they wanted more government. They were Keynesians. They were interventionists. They wanted more government to step in and save the day. Well, thankfully, it didn't really happen here in the United States for whatever reason. And so the narrative, what I learned from that was that the crowd was kind of all in on this narrative, and the narrative wasn't just a little bit off. The narrative was 180 degrees off. Okay, that's what you get at the end of major manias. They're major inflection points, and so the bubble was Japan, the anti-bubble was the United States, right? And the anti-bubble was really not just the United States, but a belief in U.S. technology. And that's a bet that I made in a big way. I mean, we were loaded up. I remember Dell Computer was one of the stocks that I recommended. They went public in 1988, and in early 2020, the stock was trading at 4 and 5/8, and they had I think they had a whole bunch of cash, no debt, had some problems in terms of overpaying for DRAM. Michael Dell was young and kind of untested, but we were buying this at book value. We bought Dell at book value back then. I don't know how much it went up after that, but that just
Best
gives you a
performing
sense
stock of the
for.
90s, actually.
It
I
was,
think
was
so.
it?
I think
Well, I didn't hold it the whole time. I wish I did, but so let's fast forward the tape to today. Today it's the narrative, and I think the narrative is that again, China's the bad guy. China's the enemy. We need to protect ourselves from the big bad wolf, and we can't trade with them. We've got like it's very this very antagonistic view of China.
all Chinese
And
students are spies. That was
yeah, yeah. And all Chinese companies are working for the government. It's like on and on and on. And so I've been kind of like my first thing is to think, okay, I've seen this movie before. Question the narrative and start fact checking. Start going into, well, who's behind the Uyghur forced labor narrative? And then you just go into the hyperlinks and you see, well, where's this stuff coming from? It's coming from the Defense Department. Okay, so there's an agenda here, and there's I think the military industrial complex is basically at the root of a lot. I think it's a combination of a couple of things. Probably the military industrial complex does see China as an existential threat, because if China is successful and we can trade with China, then there are no enemies, there are no external enemies, and they can't really justify their own existence. So I think to the military industrial complex, China is an existential threat. Certainly not an existential threat to the American consumer. The American consumer has benefited mightily from China. But you also have, I think there's another force, a very powerful force that is driving the anti-China hysteria, and that's the MAGA Republicans. There is a sense in this country that something is wrong with this picture, which is that living standards, young people are really struggling in this country, unlike anything I've ever seen before. It used to be that the next generation would be better off than the previous generation, and we just all took this for granted as Americans. Well, I think that 9/11 kind of changed all that. It really set us on a course towards more centralization, the surveillance state, the Patriot Act, the wars the forever wars in the Middle East that cost $6 trillion, lives lost, destroyed, running the printing press, gold doing backflips, the Fed's balance sheet expanding, how many times it's expanded since then. We've gotten three crises really, 9/11, we got the GFC in 2008, and we got the COVID crisis, and every one of those brought a much greater government response. So we've been accelerating in this trend towards centralization. Okay, as we have been doing that, those forces have been overwhelming the positive forces that I mentioned before, and as a result of that, living standards are having a hard time keeping up. Now, government intervention helps the incumbents. So, older people, the baby boomers that own their homes, are somewhat insulated. Big businesses somewhat insulated. But if you're a startup, if you're a small business, or especially if you're a young person starting your career or trying to start families. It's very, very difficult. So I think that there's a certain unease that has crept into to Americans, and it's expressing itself in this populist movement that Trump has basically tapped into. You could say brilliantly tapped into, or maybe he just stumbled into it. I don't really know, but it doesn't matter. So this force now is trying to diagnose the problem. It's right. It's correct. It's correct that we have a problem. All right. But the problem is big government. And the solution is to get rid of it. Okay. Start, just wholesale get rid of it. And look at what's happening right now. They've completely misdiagnosed the problem. There's none of the solutions on the table, or very few of the solutions involve rolling back the state. Okay, we've got the big beautiful bill, which is going to add $3.4 trillion in debt over the next 10 years, and that's a conservative estimate. Some other estimates go, I think, as high as 5 trillion. Okay, they are, really, Trump is bullying Powell to come in and kind of rescue the government by lowering interest rates, because they know that interest outlays are $1 trillion a year now, and consuming a big part of the budget. Okay, and so they've misdiagnosed the problem. They think they're trying to scapegoat. They're looking for other scapegoats. They're scapegoating immigrants. They're scapegoating the Chinese. The Chinese, if I'm correct, the Chinese have been one of the positive forces. Okay, trade is mutually beneficial. If trade is mutually beneficial, you want people to be productive. You want young people to be productive in this country. You want the Chinese. You want the Russians. You don't want them building tanks. You want them pumping oil. Okay. Yeah. You want everybody to be as productive as possible, and you want to be able to trade with them. So I think they have misdiagnosed the problem. And this is something that I think is, we're just on this path. Like I said, the movie's unfolding. Donald Trump, it's not Donald Trump that's doing all this. Donald Trump just happens to be in the right place at the right time. He's the guy who's steering the ship right now. But if it wasn't him, I think it would be somebody else.
Yeah, I maintain that anybody who can get elected to the presidency is you can't elect a good man to the presidency. They're always going to be someone who's interested in power, wielding it practically for its own sake, and they get something out of it eventually. But I agree that it doesn't really. It's sort of like the opposite of what Peter Lynch used to say. You want a business that's so good it doesn't matter who's running it. Well, this one is so bad it doesn't matter who's running it. The government is so bad it doesn't matter who appears to be running it, and it's just too big. I also agree with you that size, like any poor unfortunate souls who follow me on Twitter and are exposed to my ranting and raving, know that one of the things I rant and rave about the most is the sheer size. That is the problem. That is the singular greatest problem with government, is its sheer size creates an enormous incentive to anybody who can get in there and get their piece of it, right? It's like amassing a big pot of gold or a big amount of capital and inviting everyone to come and try to get some. And the incentives are poor because you aren't rewarded for innovation or productivity or serving a need that maybe people didn't even know they had, and creating something new and good. Nor do you benefit by promoting trade or free immigration. The only thing about free immigration, Kevin, is I agree with you. It's a scapegoated thing, but it's probably impossible to have it if you have a massive welfare state, right? Because you'll just.
Oh yeah, no, I agree. Don't get me wrong. I'm not advocating free immigration.
No. But,
okay.
We could.
Yeah.
But
I'm just saying. I'm just bringing that up as an example of the scapegoating. I think that the you and I think agree with this, Dan, agree on this, that there's really not a lot of difference between the left and the right. And
Yeah.
I always and and the thing that, so you have kind of this charade that's taking place, this illusion that there's actually a difference of opinion, and there are differences. There's no question there are differences, but I think that the both of them kind of subscribe to this zero sum world where one group is exploiting another group. And so to the left, the oppressor group is the billionaires and the people running businesses, and the working class is the victim. On the right, the working class is the victim, and it's the foreigners that are exploiting them. Okay, so there's really, in principle, there's not a whole lot of difference. I think the right is more nostalgic. They want to bring back a romantic past that maybe never existed, and the left is more willing to just blow everything up and just jump right into a utopian future because they basically have nothing to lose. The right people have more to lose. They have more skin in the game. But I think that's sort of a romantic backward look. Maybe so. Those would be some of the differences.
Right. And
I'm just sitting here. I'm sitting here listening, and I'm like, yes, yes, checking off, yes, agreeing with everything that you're saying. I mean, as far as like, I haven't heard somebody talk about, going, well, some people, but not like lately in a financial sense, going back to 9/11, financial crisis, and COVID, especially for like a younger generation of people. And I'm just, I see it the whole. If I didn't discover Austrian economics myself, I don't know where I would be, right now personally. And so from that perspective, like, what's the solution here? What is you said just eliminate big government. Like, what can we practically do to like just make this a little bit better?
Well, my advice is always, number one, grab the oxygen mask. Okay. And then, try to educate yourself, try to influence other people. The first thing would be, you mentioned Austrian economics. There's Economics in One Lesson by Henry Hazlitt. It's a must read. If you read this book, my aunt read this book. She loved it, and she gave it to all of her grandchildren. It's a pretty easy read, and once you understand the basic principles, basically man acts purposefully, with reason. Maybe not always rationally, but there's a reason behind actions. If you self-ownership, these sorts of things, they're basic building blocks. Economics, this is something that maybe we're getting a little too far aside, but economics is not it's not the physical, it's the social sciences. It's not the physical sciences. So the rules are different. Okay. I think a big part of the problem that we have today is that the so-called economists, not the real economists, but the ones that claim they are trying to apply the rules of the physical sciences, which is induction, which is to try to run a controlled experiment. It's very empirical. So the Chicago school is, now there's some agreement between the Chicago and the Austrian school, but the Chicago school is basically an empirical approach. But the problem is you cannot run a controlled experiment with human beings. Human beings interact. Human beings learn from past experience. So you can't just duplicate. So it means that things like back testing isn't necessarily going to work. You need a not an inductive process, but you need a deductive process. You need a basic chain of logic. It can't be disproven by empirical evidence. So, for example, it can only be disproven by disproving the logic, finding the flaws in the logic. So, I think that, like I said, the first thing is grab the oxygen mask, and that's probably where we need to go next. Is how do we do that? But the second thing is, get a copy of Economics in One Lesson, and learn about what needs to be done is basically it's privatizing things, getting the government, like what is the government. You could look at every single thing that the government does. Welfare, for example. Well, does the government, you could look at the morality of that. Is it right to take money from one person and give to another? Okay, well, so these are things that the government, that nobody should be doing. Okay, theft should not be legal. It should, okay, and it certainly shouldn't be allowed for the government. Well, then you have certain services that are being provided, roads, education, schools, all these things that the government is doing. Privatize those. All right, sell off public lands. So I think the path in terms of, like, all these things are fixable. They're all fixable if we get the economic piece right. If people are educated in economics. I think if 10% of the country read Economics in Lesson, we'd probably be well on our way to fixing those problems. But as investors,
I agree.
I think that's really where we need to kind of protect ourselves from this, and just so maybe that's where we want to go next. Like, how do we do that?
Yeah, I don't know if everybody reading Economics in One Lesson would have that effect. Lots and lots of people have read Atlas Shrugged and nothing. So, I mean, we're
well, it wouldn't hurt.
Yeah,
it won't hurt.
But let me add one thing, Dan. I think it's a combination of two things. One is we have to learn, we have to study. But the other thing is that bad ideas have to fail.
Yep.
Okay. I mean, my experience, and not just with other people, but even myself, is that if I'm on the wrong path, the only thing that's going to get me to change is I have to fail miserably, and I've done that in my career. And I was a failed short seller, and I made changes 5.5 years ago. I was forced to change, and I think that most people are the same way. So we need these these experiments to fail, basically. And I think if they do, when they do, then that's probably our best chance that things will change. And young people are, they're distrustful of these institutions. That's a good start. That's a good start. So no, I'm an optimist long term. I mean, it's just a matter of, this is all going to play out. The nature of bubbles is that they do eventually burst, and when they do, you get a massive change in trend, and that's in the future.
I agree.
Somewhere.
The ideas fail. They probably take longer than a 63-year-old wants them to fail, but and then longer to fix or whatever. But yes, I agree. In fact, you mentioned the start of the United States and how we learned to love liberty, but it wasn't for lack of trying everything else. Right, like this country, it was in the 17th century, almost practically right up to the time of the Revolution. They tried absolutely everything else. I mean, they hung people for being the wrong religion, and you weren't allowed to. You could be tortured. Your punishment for not swearing allegiance to the Massachusetts Bay Company or whoever the hell it was, would be to be dragged behind a cart through all the towns in the territory or whatever. And you being a Catholic would have been illegal, say in Virginia, and you're right next to Maryland, which was Catholic, the Catholic proprietary there. So they tried everything else. They did absolutely everything else. And
right.
And if you can get this story in Murray Rothbard's book Conceived in Liberty. Just the first of the 5 volumes will blow you away with how awful and evil these people treated one another and tortured one another and killed one another, and they went after the Indians too and used them in every evil way you could. And yet Rothbard, at the end of these chapters and sections, he said, they tried it and it failed. They tried to manipulate everything, but the free market will out, and it failed. And they sort of gradually, like liberty was, I say age thrusts a certain amount of wisdom upon me. Well, time will thrust an appreciation for the cardinal virtue of political liberty upon you. That's the cardinal virtue. It's not democracy. We can hear a lot about democracy nowadays. It's completely misplaced. The cardinal political virtue is individual liberty. Eventually, nature just forces that revelation upon you in all kinds of ways.
I think there's another force here another very positive force that is going to bring an end to this. Okay. And that's what's happening in the rest of the world, and particularly in Asia. I'm not going to include Europe because they've got their problems as well. But, the more I've gotten into China, the more excited I am. When you look at, so here's an example of how I think man does learn. All right. Go back to Smoot-Hawley. The reaction to Smoot-Hawley, the rest of the world, was to retaliate. Okay. And trade went down over 60%, and, kind of helped sow the seeds for Hitler and World War II and that sort of thing. And I was looking at this originally when Trump was bringing out the big guns with the trade war, and I'm thinking, oh my God, here we go, 1930 again. The rest of the world is going to respond this way, and what a disaster. And the opposite has happened. I mean, I'm like, I like to be pleasantly surprised, and this is an example of where I didn't see this. This wasn't on my bingo card, that the rest of the world would basically say, you know what, this guy's nuts. Okay. Just because he does something stupid to his own people, we don't need to do the same thing. In fact, because he's doing this, we're going to need to band together. Okay. So, and who's leading the charge, the free trade charge? It's China. There's no question in my mind. It is China. And so, all these countries are now basically forming this block, this alternative. So the United States while it's isolating itself, the rest of the world is kind of coming together into this big block. I see that as incredibly exciting. And I think also, what's going on in China, Asia, to me, the future is Asia. If I were young, I would be learning, Mandarin, and I'd be spending time in China. So there's always opportunity.
You sound like Jim Rogers.
You can't allow yourself.
You sound like Jim Rogers. If you're young, go to Asia, learn Mandarin.
Yeah.
I'm sorry.
Yeah, have your kids over there. Get them to learn Mandarin.
Is that the oxygen you're talking about? The rest of the world? That's where we go to seek oxygen?
Yeah, that's the oxygen mask. Exactly.
Okay.
So, yeah, there's always, and I think this is what's exciting right now. Silicon Valley has always been dominant. There's never been another. Well, we now have what's going on in China with technology is incredible. We've never seen anything like this. We've never seen a country, now it's the second largest economy, and they're on their way to being the largest economy. We've never seen a country been able to basically stand up to American imperialism, and China is doing that. I see that as incredibly healthy for the world. So this is what gets me when I get up in the morning. This is what gets me excited. It allows me to kind of deal with, unfortunately, the negatives that are playing out in my country and our country. But there are ways to protect yourself in the U.S. and there are, of course, companies that are American companies that are doing very well overseas. So it's not like there aren't any opportunities here in the United States. And I think even the United States, there's still there's still a lot of really positive things that are going on. There's still entrepreneurial energy. Um, pretty good capital allocation that's taking place. I think that the Chinese are sort of learning from that, but there's always something. There's always some opportunity somewhere.
Yeah, reminds me of Peter Cundill. There's always something to do. Always, you
Mm-hmm.
got to be a. It was one of his great pleas. That's the name of his biography too. There's always something to do. It was one of his ideas that you really should be a global investor, because if you are, then there is always something to do. If your home country is a bad bargain, is not a bargain, the opposite of a bargain, a bubble. There's an anti-bubble, which is a phrase I like very much too. Somewhere else, or in some other asset besides U.S. stocks and bonds, and that alone is to me the reason to become much more interested in other countries. You know, there's always something to do if you are. You'll always find something, even if it's just a single company in a single country that you never considered before. There's always something to do.
And it's never been easier too. It's never been easier to be a global investor.
Right. Yep.
I mean, the balance sheets in China, they have, these are companies that are they've got ADRs. They've got to comply with the American accounting standards, and I mean, it's just as easy to read a balance sheet from Alibaba than it is to look at one from Alphabet. No.
Yeah, that's pretty amazing. I remember years ago I bought a book that's still on the shelf back there somewhere called Asian Financial Statements, and I thought, well, financial statements are financial statements, you know, and it was really, it's a very sort of real, in your face kind of a book, um, about how things were, you couldn't trust them basically, and here's how you figure it all out. Um, maybe it's not that bad anymore, huh?
Well, and look, there's all kinds of ways to invest in China. There's the A shares. I haven't really gotten into that. That's kind of higher, next level. But you've got companies that are these are global companies that are having to comply with standards. Look, the U.S. government has wanted to kick the Chinese companies out, and I mean, any excuse. Believe
Mm-hmm.
me, if they weren't complying with accounting standards, they would be
Mm-hmm.
gone. Okay, so and this has been the last 25 years. All this has been going on in China. It's becoming a very much a westernized country in many respects, and they're the fast learners. They're learning capital allocation. I think what's amazing is how the Japanese, it's taken them forever to learn capital allocation, and the Chinese, so the China is very different than
Mm-hmm.
Japan. China is it's super competitive, um, constantly driving prices down. And I think what the next thing that we're going to see. So while a lot of American investors are avoiding China, and what we're going to see is that Chinese companies, they're going to start to, they've been exporters, okay, and they've done very well exporting, but we're going to start to see more multinational, um, you know global consumer brands coming out of China. I think that probably the first obvious one is BYD, which is now the largest producer of electric vehicles in the world, and an incredible. And Warren Buffett and Charlie Munger invested in that company in 2008. A remarkable success story. Founder led, lots of skin in the game. I haven't even recommended it yet, so um, I'm sure I will at some point. But I think that's the next thing. The next act in this play is we're going to start to see the Chinese push, it's going to look you're going to have multinational companies and brands built up around the world.
All right. This is a good place to ask our final question, which is the same for every guest, no matter what the topic. The question is for our listeners' benefit. If you could leave them with a single takeaway, just a single thought today, what would you like it to be?
I've actually thought about this, and I listened to your show quite a bit. So this time I actually decided to prepare something.
I think it's the first
Never
time
allow
ever
yourself to become over.
that
I
anyone
know.
ever has.
Why not? Let's break some
Yes.
ground here.
So I'm talking about. Yeah.
But never allow yourself to become overly pessimistic. The dominant long-term trend is the hockey stick of human prosperity. Look for problems, look for solutions to problems, bet on entrepreneurs who are passionate about serving consumers, look for the silver lining in the cloud. There's always opportunity somewhere. The upside of bubbles is that they create anti-bubbles. Defend capitalism, promote free trade, and never underestimate human resiliency.
Well said. That is
Nice.
excellent. Thank you for that. And thanks for being here, Kevin. It's always a pleasure to talk with you.
Enjoyed it. It was good meeting you, Corey.
Yeah, you too. Thanks for being here.
All right.
And thanks for reading my stuff.
Yeah, we're going to keep doing that. And next time, we're not going to wait 2.5 years to have you back on. Well, it's nice to check in with Kevin after 2.5 years and find out that he is still a sound Austrian thinker and an optimistic guy, which is refreshing, I have to say.
Oh yeah, totally. I was sitting there during it. I'm like, I need to talk to more Austrians here over time. Every time it just it confirms all of my biases, and I feel very good about it. But I happen to think it's all correct. So that's nice. But
Yeah.
I like the way if you want to check out his newsletter, you should. I mean, I like the way he goes about it. He's got these macro themes, that he's that he kind of has developed or identified as just important, or like that are emerging over time over long periods of time, as he says, and then kind of matches up the stock picks to those themes, and how they could play out. And I think you got a taste of that here with the centralization theme and China being an opportunity, ironically, to be against that. And so, yeah, I'm happy we had him on. It was a cool talk.
Yeah.
And he brought book recommendations, which is always nice.
Always welcome. Yeah. You mentioned a good point, which is China. I think, if I'm not mistaken, is like the only person who he's not only said that it's not uninvestable. He says it's a contrarian opportunity. So he's 180 degrees from, I can't remember anybody else expressing any idea about China except that it's uninvestable, which is always what you hear, right? That's always what you hear when with the good contrarian opportunities. Everybody else says it's uninvestable. One guy like Kevin says buy. So,
yeah, for sure. It's funny because when he a couple, or I don't know, a month or two ago, when we interviewed Brett Eversole, or I did. It was the week you were out. And we were talking about cheap, hated, and in an uptrend. And after that episode, I got a message from Kevin on Twitter about like, hey, what about China? And like, well, there we go. So yes, to that point. Yeah. I mean, brought up a lot of interesting points that I hadn't heard before. And I'm sure maybe other people won't agree with, but that's the point, right? So
it is. It is. That's how contrarian a real contrarian is. He'll say things like, well, immigrants are scapegoated. And I'm sure a lot of people are going to go, what? We have too many illegal immigrants, et cetera, et cetera, et cetera. And it doesn't, they can sort of both be true, right? You can have a problem with having let too many criminals in your country. And it can also be true that you're unfairly scapegoating the entire immigrant population. That both of those things can be true.
Right. Yes.
Yeah. So for that alone, for his deep contrarianism and his consistency, his intellectual consistency, it's always great to have him around. So that was a to me, it was a great fun interview and a great fun episode. I hope you enjoyed it as much as we really truly did.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.